Hey guys, welcome back. In today's video, we are talking about the AMC earnings, the ETF to short AMC, how shorts are fighting against each other, and many more in this video. Firstly, we're taking a look at this. Just a friendly reminder, AMC's Q3 2024 earnings will be released after hours on November 6th. So National Cinema Media is November 5th after hours, IMAX October 30th after hours, and Cinemark October 31st pre-market. So what's important is firstly understanding that we obviously have ours later than the other three firms. Now, two of the ones that I would definitely be taking a closer look and I will be talking about will of course be IMAX and Cinemark. Now, something that everyone obviously knows is that we always compare AMC with Cinemark, and especially at a time like this, it's definitely good to take an understanding in terms of the earnings and the difference in earnings. Now, remember last time, the last quarter for Q2, AMC earnings didn't beat consensus, and people were saying that IMAX was better than AMC, but that's because IMAX actually readjusted their consensus, whereas AMC didn't, where in actual fact AMC still did better than IMAX. And so that's why we're obviously taking a deeper look, and it just gives us a better understanding and more clarification in terms of where we are in the industry, why we still are of course the number one, and how we're beating these firms, and we further understand in terms of the valuation we should be looking at for AMC. Now, more about the earnings is that definitely that the quarter to date box office for Q4 looks strong. We are only 9 million from 2023 numbers. So firstly, going in now, we are obviously talking about the Q3 earnings for November 6th, and this is about Q4, but it's just understanding that what we are seeing with the box office right now is that it's still doing very, very well. It is still looking very strong, and that itself is important because we've seen how Adam Aaron himself has obviously said that we don't actually need the box office to do as well as previous years in order to make the same amount of money as previous years. And we've known that with the best ever June EBITDA in the history of AMC, and understanding that AMC has now made themselves to be able to operate and make more money even with a lesser box office. So that itself is important. One thing we do know is that the box office is obviously going to go even bigger. It's going to get even better. And so it comforts us knowing that we are able now to make more money with less box office, and understanding with the box office improving and increasing, we're definitely going to make even more money on top of that. So, you know, like I said, Q3 is going to be looking like it's very well for AMC, and Q4 is already looking strong. So from the fundamentals of this, we understand that AMC is doing well, and that's obviously important for the longevity of the company, to understand that in the long run we are doing well, we are generating money, and we are beating the short sellers. And that's why all of these are of course the important factors. Now you can also see, so this is the AMC short fund. Look how desperate they are to keep us down. So if you take a look at this right now, this is the Granite Shares 1x short AMC daily ETF, where they seek daily inverse investment results. So essentially what they do is that obviously with AMC going down, they are of course making money, and that's what it is. So this is an ETF used to of course short and bet and speculate against the downward performance of AMC. Now firstly, the very fact that this is a fund is already very, very shocking, considering the fact that there is not that much volatility when it comes to AMC, and understanding that it's a company that's actually doing very, very well fundamentally. Why is there an ETF created for to short against AMC? And you can see this, because they can't find enough shares. The Granite Shares, it allows shorters to bet against AMC without borrowing shares to short directly in the open market. By loading shares in an ETF, hedge funds have to use total return swaps or futures, pure desperation. So this is what we've seen, and just like what we talked about in our previous videos, like you said, they have plenty of ways to try and exploit loopholes, find other ways to manipulate and suppress AMC, and this is of course one of them. Understanding that they created an ETF just to short against AMC shows you firstly that they are of course lacking shares, and secondly understanding in terms of what their kind of determination is to actually try and push push AMC's price down as much as possible. Now, like we know that obviously this is just another one of the methods that they've done. You can add this onto the list like we've seen before, FTDs, the swaps, cryptos, you know, all of these things. This is just one other method, but it just shows what their desperation is. And this is what they do to short directly in the open market by loading shares in the ETF hedge funds and have to use total return swaps. So this is of course one method that they are doing. Now, on the subject of the short sellers, you can see something that's not going well in this industry. The crux of the issue though is that short sellers are no more likely to trust each other than they are corporate executives. And so this is what you can see. This is a small industry which already faces plenty of controversy by virtue of the fact that we are basically picking fights with white collar criminals for a living. Short sellers complain that nobody likes them, but when it comes to popularity, they hardly help themselves. So this gives us a bit of an inside look in terms of the short industry, and understand that essentially everyone in there is one for themselves and they're not helping other firms. So when it comes to this understanding, it's even more fishy that the short sellers of AMC and GME, the different short sellers, are all coming together. In an industry where they typically fight against each other, they're coming together for AMC and GME. Why is that? Well, the only time, and for these guys whose whole objective is to make money, is obviously because it benefits them, because they understand that if they come together, they're obviously able to suppress AMC. If they fight against each other, no matter who, all the firms who have created these synthetics will all lose billions of dollars, and that's why they're together. But this also allows us to understand that when the time comes, and when we're talking about when things get extremely serious, when we are already seeing firms that can't handle the margin anymore, that are getting margin call, that are losing hundreds of billions of dollars, remember, they won't help each other. They will be the first one to pull out, and that will of course trigger a domino effect. And so this is what we talked about. The short sellers try to fight against the retail investors, but what they have to understand is that the retail investors are all coming in together. We are all united. Whereas the short sellers, whilst they may be united now, at any point they are and won't hesitate to sell off one of course, their industry, I guess you could say, colleagues. And you know, that's when the time will come for all these firms to actually get margin called and lose hundreds of billions of dollars. Furthermore, I believe we are headed for default 5. So you can see the United States has technically defaulted on its debt 4 times, and these are the 4 which you guys can of course take a look. And very likely of what we're seeing is that we're going for that number 5. And again, this is going to be something that is extremely serious because of the effect it will have not just on the stock market but the overall economy. And there's a big reason why we are saying this. Don't forget, 7.6 trillion in treasury notes is set to renew in a month, and half at the new rate, which makes the debt more risky, which means the 10-year will jump again, and so will mortgages and auto and credit cards. And this is what we talked about. Like I said, this isn't the only thing, but this is a thing that we need to be looking at. We've already seen how plenty of industries are already showing failures, and we're seeing how no matter if it's institutions, the banks, everyone is running low on cash. Everyone is all failing because of the risky investments that they made, and all of these risky investments are also failing. And so you can see how this is all a massive cycle, and that's why, like I said, it's very likely to be looking at a major event that will have massive impact towards the market, whether it be a massive market crash, wherever it be, you know, banks failing again, bankruptcy, etc., etc. This is something that will very likely to happen. There's not a set exact date, but we are definitely seeing signs of this happening. And when that time comes, that's when we'll be seeing everyone who's tried to fight against us all fail. Remember, it costs them money to hold on to these positions. It doesn't cost us any money. So you can imagine when they run out of money to continue financing their short positions, when they run out of money to continuously making new short synthetics positions of AMC and GME, you can see how that's obviously going to go extremely bad for the short sellers. Furthermore, breaking, Keith Gill, aka Roaring Kitty, aka Deep Fucking Value of GME GameStop has 0 ownership in Chewy according to the most recent 13 filed today. And so this is what we talked about. Now, this doesn't obviously come to us as a shock, especially when we understand what's happening. You know, we obviously deciphered and decoded Roaring Kitty's tweet that he obviously made with the emoji, and we understood that it very likely sold his Chewy shares. Now, on top of that, something else, another theory that we obviously came up with was the fact that he's very likely to have bought more GME and in fact have bought actual shares or options of AMC, and that's what the latest thing is to be looking at. Now, just because Roaring Kitty bought AMC and GME, it doesn't mean it's going to squeeze. What it does is of course bring attention, and like we've seen in the past about how these short sellers are obviously trying to sue or even try to obviously say that Roaring Kitty is manipulating AMC and GME is because they understand that the volatility this will bring. And just like we've seen in the past before, and what we should be looking out for in the future, is that if what we saw was Roaring Kitty loading up on GME calls and GME shares, and the potential fact that he has loaded up on AMC, then it's definitely going to be a massive volatile market for all of us. Anyway guys, thanks for watching. I'll catch you guys next time.